Well, I'll tell you, the deposit growth at the largest banks has been at a record pace, and a lot of that is due to digital banking. So you're seeing this surge in deposits without much loan growth. So the ratio of deposits, what banks have available to lend, to actual loans is the lowest level in almost half a century. So the banks are willing and able to lend as the economy recovers, and we think loan demand will pick up in a few quarters.
But the loan demand just isn't there right now, and the banks, let's just put it mildly, they are not exactly paying a ton of money for those deposits, are they?
Well, look at what the impact has been on the banks. The year-over-year decline in the first quarter, what's called the net interest margin, it was the biggest decline in a century, and that's as a result of the lower interest rate. So as the economy and banks come out of this low rate environment, banks should be among the biggest beneficiaries.
So banks should be a big beneficiary of that. Should banks be a big beneficiary of rising inflation if it doesn't rise too much too fast?
Absolutely. We're going from non-existent inflation and a little bit of higher interest rates. A more normal yield curve would go a long way. In fact, Tyler, I would say, let me just sum up, because you talked about how well the bank stocks have performed. We think bank stocks have a long way to go. This is a great time to be a bullish bank investor. I'll sum it up as the 5 C's. One of those C's is the curve or yield curve, as you're already talking about. Another C would be credit quality is improving much faster than many had expected. The third C would be capital markets, which are stronger for longer. The fourth C is the return of capital and the expectations of higher dividend payouts. That should happen later this year. And the fifth C is what gets me excited, having covered the industry for 3 decades. That would be costs. And, you know, Tyler, I will give you the conclusion of our bank conference this week before it even takes place, before the 25 bank CEOs even present. The conclusion is, with a little help from Plato, necessity is the mother of invention. Banks are headed toward record efficiency. And that's because banks have no choice competing against big tech and big retail and non-banks with less regulation. And that's enabled at the banks by a tech revolution. And the pandemic turbocharged that ability, both in the front office and the back office. So, Tyler, it's not just about the yield curve and higher interest rates. It's also about this really a once-in-a-lifetime implementation of tech that should take efficiency toward record levels.
Shepard Smith here. Thanks for watching CNBC on YouTube.